We have David Morrison, Senior Market Analyst, Trade Nation, joining us this afternoon. Hiral and David, there's been plenty of FII interest in India of late. The last 10 trading sessions, we've seen $4 billion of FII inflow. What's changed, in your opinion, David, with regard to India?
I think it's the first inkling that President Trump has blinked, really, in terms of his tariff escalation, tariff war, trade war against China, but tariffs against other countries. The fact that he has backed down, and there's still very much, although there's a little bit of confusion going on, and I think that's quite deliberate as far as the Trump administration is concerned. They are broadly hinting that negotiations have taken place. And it's India that really is in the spotlight on that. Although there's also talk about some deals being done with Japan and the European Union, it does look like India is first up on this. And I think that's really why there's so much interest now and so much more flow going in that direction.
Okay. So if you're seeing that kind of flow that's coming into Indian equities, which are the sectors that the European FIIs are betting big on?
Well, I suppose it's really anything where China has been the main provider of these things. So, I mean, I think that's the other thing, really, that Europe and other importers are now looking for alternatives to China, very much so. They also realize that the Trump administration has its eyes on countries like Vietnam and other near neighbors of China in terms of they are aware that these are areas which have been not just competition to Chinese manufacturing, but also places where relabeling has gone on as well in an effort to avoid the threat of tariffs, which has been around for quite some while. So I think that's the thing, really. It's thinking, where are the danger areas? Where could we have a problem sourcing certain materials and parts and whatever? And then that's where the money's going. I feel that's really the situation.
So when you talk about the India and European Union free trade agreement, talks are ongoing. Next round is again in May 2nd week. Taking that into consideration, anything that you would put your bets on?
Well, I tend to look at the more general outlook, and I was just thinking about how markets have moved really since, well, not just since the Liberation Day imposition of all the reciprocal tariffs from the Trump administration, but then, of course, the fact that Trump backed down very quickly, just about a week later. And we're now in a situation where there's a postponement for 90 days. And bear in mind, we're more or less a third through that already, but we still have a blanket 10% tariff on goods. And of course, China has this enormous 145% tariffs on its exports to the US. And of course, on the other side, China has imposed 125% on the US. So what I think the problem is, I think that the markets have reacted very, very positively to this backtracking by the Trump administration on tariffs, and also the fact that President Trump's attack on Fed Chair Jerome Powell has been dampened down. He has backed away from that, and they've reacted accordingly. We've seen stock markets going from being very oversold now to much more neutral levels. But an awful lot of good news, I think, is getting priced in by the US stock markets in general, and it wouldn't take much for markets to take a bit of a hit, just a little bit of disappointing news. Bear in mind, as far as the US is concerned, we've got some very big tech companies reporting tonight and tomorrow. And we've also got some very important data with advanced GDP, core PCE, the Fed's preferred inflation measure, and then, of course, on Friday, non-farm payrolls. So I think that I could see that there are certain markets, such as the US dollar, which is very oversold and is now having a little bit of a bounce against everything. US stock markets, which were very oversold, but are now having a bit of a bounce and are back to more reasonable levels. And now there's a sort of consolidation going on as traders, investors sit back and really are waiting for news flow, whether it be on tariffs and trade, or whether it be on tech earnings and indeed US economic data.
David, just taking a step back here, markets more or less globally have done fairly well despite the amount of uncertainty that has gripped economies globally. Now, in that sense, how do you look at valuations given that bond yields are holding quite steady when you're looking at it over the last month or so, which is pre-Liberation Day and current? How do you therefore assess valuations globally?
Well, I think there are certainly areas outside of the US which are very fairly, if not very attractively valued. And I think there's certainly been a switch in emphasis for investors to maybe turn away and sort of put aside the idea of US exceptionalism, which was certainly the story of the sort of the last half of last year, and really saying, well, there is no alternative. You have to be invested in US and forget about the rest, really. Now, that situation has really turned around on its head. Yes, the valuations for the big tech, the Magnificent Seven US stocks have come down. They come down perhaps quite dramatically in some respects, but they're still not particularly cheap. They're not, in fact, they're nowhere near being cheap. They're still very expensive. And yet there are certainly areas, there are certainly stock markets around the world, India included. The UK is a little bit undervalued when you consider the composition of the FTSE 100. It's certainly a sort of an alternative to the tech-driven stocks that we've tech-driven indices in the US. So I think that's what investors are doing now. They have sort of reduced their exposure to the US and to US tech in particular, not hugely, but by a significant amount, and are looking for sort of better valuations elsewhere. And I'd just like to say one thing, if I may, and that is that the Dow Jones Industrial Average may be down about 10% or so from its last peak. The Dow Jones Transportation Average is down around 24% at the moment from its November high. And I think that is actually quite a danger signal for markets in terms of how much damage the tariff escalation and the trade war has done already, despite the fact that it's only, less than a month old.
Right, David. Very interesting times and very volatile as well. So always good having your view. Thanks for coming in and speaking with us.